Hi, I'm Alistair McCaig. I'm a market analyst here at IG. This is in fact quite common for most spread betting firms. It's just really the cost of having to use the word FTSE or the Dow Jones. Quite frankly, it is quite a sizable cost, and if we don't need to expend that and therefore effectively pass that on to the underlying client, we won't bother. Well, the FTSE 100, ironically enough, is not actually made up of 100 stocks. It's slightly over 100 stocks, 102, and it does fluctuate from time to time. And what it really is the largest companies by market capitalization. And by that we refer as a straightforward calculation of shares in issue multiplied by the share price, giving you a total capitalization of the company. So it's really the 100 or so largest companies that are quoted in the UK. The FTSE stands for the Financial Times Stock Exchange. Again, I guess this is dated back to when it first started. In reality, it doesn't really matter what any of these indices are called. It is the leading barometer of UK companies. I think it's worth noting, of course, when we do keep referring to the FTSE and saying UK companies, that in itself is a slightly misleading aspect, because the FTSE does have such a large array of multinational companies that derive a great percentage of their income from out with the UK. And if we look maybe specifically at the likes of Fresnillo, for instance, they hardly have any staff inside the UK, and almost all of their financial doings are out with the UK and based over in South America. I think if someone's looking to trade an index which will give a clearer or more direct reflection of how, say, the UK economy is performing, they might be better off looking at a slightly broader index rather than the FTSE 100. I think the FTSE 250 or even the 350 will give them a more direct exposure to actually how the underlying economy in the United Kingdom is trading. I think the FTSE 100, when we opened up the doors to international traders so many years ago, has created a multinational city in the city of London, where we can look around seeing so many firms, the likes of UBS, Deutsche Bank, Citigroup, that trade and have large bases here. And it's not just financial institutions that have come to the City of London to utilise it as a gateway to the European markets, but so many other firms as well. That's a good question. When we talk about the larger firms on the FTSE 100, we should realise that the FTSE 100 is made up of so many companies that have such different market capitalisation, and as such their weightings in the index are slightly different. As many a spread better and CFD trader will know, one of the larger ones, and certainly one of the more popular ones to be traded, is the likes of Vodafone. If we look at, say, the likes of BP and Shell actually having two quotes on the FTSE, they do carry such a large weighting, and if they have a particularly good day, then potentially the FTSE might be slightly skewed in that direction, rather than necessarily what the vast majority of shares in the index might be doing. I guess when we see retail traders come to the market, not just in the FTSE, but I think in all indices globally, they do like to trade things they can get their heads around and understand, and maybe have a sort of a visualization of them. So when you talk about BP, when you talk about Vodafone, it's very easy for retail clients to visualize in their head a Vodafone store on the high street, a BP petrol station as it were, so that they can get their head around it. So they do like to trade it. Some of the other companies out there that maybe they don't have such a clear understanding of can maybe be a little bit daunting to start with, but once you have a better understanding of where these companies are, what their exposure are, then they could become quite attractive propositions. We talked about Fresnillo slightly earlier. It's a silver company. It's based overseas. You'll never see them on the high street in the UK, but if you're looking for exposure to trade the underlying silver market, you'd be hard pushed to find a better company to trade than them. The FTSE 100, as it is an index that is derived from the largest companies by their capitalization, share prices obviously fluctuate, as all traders know, and as such, these companies will change from time to time. There's effectively a quarterly review that is done whereby the smallest 1, 2, 3 equities in the FTSE 100 will be reshuffled back down into the 250, and therefore companies that are in the 250 that might have seen their capitalization increase due to business movements will see themselves promoted into the FTSE 100. These do tend to be posted quite some time ahead of schedule. It's easy for people to work out what companies are likely to get promoted and which companies are likely to get relegated. I think because the FTSE is such an internationally derived index, to say that the FTSE is moved by the DAX in the morning and the Dow in the afternoon historically certainly used to be the case, but I think now is starting to change a little bit more because it is such a multinational index. I think also it's worth noting when we look at the sectors that make up the FTSE, that can play as much a part of it as anything else. The UK as a trading environment, as an economy, does have its largest trade partner being the European Union, and of course the DAX, Germany, is one of the largest, or is in fact the largest component of the European Union. Having said that though, the DAX in itself is made up of only 30 companies and is a slightly less broad picture of the German economy. What really is maybe a more accurate indicator as to what the FTSE would be doing is actually some of the components. We touched on Shell and BP, and therefore the oil price, those three companies, the two Shell quotes and the one BP quote, do contribute to a large percentage of the FTSE 100. So if we see the oil prices moving substantially, that will have an effect on our index as opposed to necessarily what Germany might be doing. And I've always found when coming into the offices before 8 o'clock and around about 7 o'clock, it's always been prudent to have a little glance actually at the Australian stock market, because that index is, ironically enough, has a lot of similarities in the way that it's weighted, with commodity aspects obviously in Australia, and there's a number of companies that are quoted both in Australia and in the UK, also as far as their financial sectors are concerned as well. But it's worth keeping an eye on these sectors to give a little bit more of an accurate indicator. As far as the afternoon trading sessions are concerned, yes, America still does play a very large part in how the UK and the European indices will trade throughout the afternoon sessions.